Hey everybody, I hope you guys are doing well. I decided to do this video after meeting my CPA this morning. I had a meeting about the year so far. Basically, the third quarter is over. We wanted to review things. We try to do that on a quarterly basis. Plan for the fourth quarter, plan for the end of the year, see what our trajectory is, talk about taxes, talk about profit, EBITDA, and so on and so forth. And so the first question that I would have for you guys is, do you meet with your CPA on a regular basis? Is this a part of your business? And the answer should be yes. However, a CPA or any kind of an accountant is not necessarily a management consultant. He or she is not a financial consultant. There are people that basically deal with taxes, and their fiduciary responsibility is to make sure that your taxes are done properly and hopefully reduce the amount of taxes that you have to pay to the government on a very regular basis. So anyhow, I met with the CPA, and unfortunately this year it seems like our top line has dipped, but we've done so much work from the beginning of the year to reduce expenses, whether it's in payroll, whether it's in materials, whether it's in IT, our computer system, and so on and so forth. We really worked really hard on reducing the expenses that we have. So our bottom line is definitely higher than it was last year, but unfortunately things have dipped at the top line. And one of the reasons is the fact that we've lost some associates this year, and so we're rebuilding the team of providers, which makes it a little tough, needless to say, at the beginning. That's number one. Number two, it seems like the change that we've had with our computer system, we changed the software that you use for managing our businesses, our practices, and by changing them, it seems like things were a bit out of control at the beginning. They were inaccurate. An example, our office manager discovered that there were several procedures that were not billed to insurance companies, and we didn't even have a report to show us that we had procedures that were not billed. So she discovered that. We contacted the insurance, we contacted the computer company, and that was fixed. So there were a lot of instability this year that may have contributed to the top line not being where we want it to be. However, things are on an upward trajectory, and it's really nice, and it's really heartening to find out that our bottom line is definitely better. So we're definitely on the right track. He talked to me about my payments, how I need to get paid as an owner going forward, at least for the next year. And the decision was for us to do basically distributions as opposed to salary. Right now, I pay myself salary, and I pay, and then I get some distributions from the profit of the business. That's a good model. We've had that for a while, but the fact that we did so much work last year, actually 2 years ago, in terms of rebuilding, as well as, I'm sorry, the people next door are doing the lawn, so it's creating a lot of noise. But anyways, so a couple of years ago, we did an expansion of our main location, which cost quite a bit of money, in the six figures, in the high hundreds. And we were taking that as losses. So the fact that we have so much loss means that our tax outlay is not nearly as much as it could be if we didn't have that. So instead of paying the taxes on payroll on actually getting money and actually getting myself a salary. We decided to eliminate that and just go on distributions, at least for the next year. So look into that. If you've actually spent so much money on an expansion or building or rebuilding or anything that required a large outlay of money, look into the possibility of not having to pay yourself a salary, but just pay yourself out of the distributions. I am not a financial advisor by any stretch of the imagination. I'm just relaying some of the information that I got from my CPA this morning that I assume and I hope could be helpful to somebody who's going through the same process. Hey, listen, if you find this material interesting or has any value for you, I'd really appreciate it if you consider subscribing to this channel. I'm trying to build this channel. I'm trying to provide some information that would be beneficial for your business in terms of getting control over it, as well as hopefully growing it if that's what you want, scaling it upwards. So any help would be greatly appreciated, and biggest help that you can give is to subscribe to this channel. Another thing that we talked about and looked at were what we call the adjustments on accounts. So in my field, there are three numbers that we look at. One number is called production. So you come in, you have a procedure done, we go ahead and bill a certain amount for it. If you have dental insurance and we participate with that insurance company, and that insurance company decides that the amount that should be billed for that certain procedure is less than what you charge, then you basically, by contract, you have to accept whatever that insurance company decides is the reasonable fee. So you have to reduce the amount or adjust the amount that you bill. So it's called an adjusted production. And then you have the final number is what's called collection, and that is the actual money that you receive for a procedure, that money that actually goes to the bank, that you can pay bills with, that you can pay salaries with, and so on. So it seems like our adjusted production percentage, the percentage between our adjusted production and actual production or gross production, has dipped, is actually less than it was last year, which doesn't make a lot of sense. So what we're going to do is we're going to look at 20 or 30 accounts, just pick them randomly, and see exactly what the adjustment was and what it was done for. So it's a way for us to audit whether things are being done properly and that there's no shenanigans going on, and so on and so forth. So, I don't do that on a regular basis, but it's a good idea to do that at least once a quarter or once, towards the half mark of the year and the end of the year, once every 6 months. It's a good idea to do that to make sure that you're staying on top of things and that things are not slipping from under you without you noticing. So the first thing that we're doing, or the next thing that we're doing, is we're gonna, as I mentioned, pick about 30 accounts, and for me to look at the adjustments that are being done and make sure that they're being done properly and correctly with proper explanation for each one of them. If there are adjustments that are not right, correct, kosher, any term you wanna use, then it would be a good idea, after inquiring about them, to get your CPA or accounting firm involved to do a bit of a more in-depth audit to make sure that that things are being done properly, and God forbid that there's no embezzlement going on in your business or practice. I highly recommend that you do that on a regular basis. Another thing is to audit your payroll. Every once in a while, look at the payroll. Does it look right? Is it in the same vicinity that you've had Are there any outliers? Are there any ups and downs? Does it look like it's kind of even? Does it make sense? If it doesn't make sense, you need to do something about it. You have to really look at payroll on a regular basis to make sure that it's being done properly. People are not giving themselves raises without you knowing, especially if you have a bigger business where you're not there on a regular basis, where you're not physically in the same vicinity as where those employees are working. You need to really stay on top of the numbers to make sure that no, again, mistakes or God forbid shenanigans going on when it comes to payroll. You have to really keep a tight fist against your expenses. One time a person said, quote unquote, God gave us two eyes to use. One was to keep on the customer, and the second one was to keep on expenses. Another thing that was discussed was the amount of fees that we pay on credit cards. The majority of payments that we have in our business are either credit card payments or insurance payments. We rarely have any cash. I mean, every once in a while we do, of course, but it's really not that common. So it was recommended that we look at the amount that we pay in credit card fees and to consider maybe passing that amount, let's say it's 2.8%, passing that amount to the customer. I'm not 100% sure about that, but it's definitely one way for us to cut costs and to increase the top line. Again, maybe not. What do you guys think? Do you guys usually charge the customer or the client or the patient for that fee? Do you pass it on to the consumer, or do you just eat it and consider it a part of doing business? I'm really curious if there's any way you can put a little comment at the bottom what you guys do with that. I'd really appreciate it, just to know which way you guys go with that.